Hi all and welcome to another edition of our weekly report for the week starting Monday 24th of June. We have a quieter week ahead of us, which starts with UK inflation report hearings on Monday. On Tuesday we get the Bank of Japan meeting minutes and also US consumer confidence. Additionally, US dollar traders should pay close attention to Fed's Chair Powell's speech, which is scheduled at 5 p.m. UK time. Going forward, RBNZ interest rate and also press conference, US durable goods and crude oil inventories are the main point of interest on Wednesday. On Thursday, look out for Japanese retail trade, Eurozone Business Confidence and also US GDP figures. The week will finish on Friday with Japanese and also Eurozone CPI data. Also look out for UK and Canada GDP figures. Now let's take a look at a few markets. This is the intraday price action based in 4-hourly time frame for euro dollar. Euro dollar appears to be quite bullish at the moment, weaker US dollar as a result of Fed's indication about possible rate cuts going forward, and we saw a breakout out of something what appears to be a falling wedge pattern and a breakout above this falling resistance trend line. The key level that we were keeping an eye on over the past several weeks was at 112.50. A breakout above that level potentially caused this spike higher. So bulls are in complete control above that key trading level or key trading zone. It's actually a zone of about 50 points, 120, 12.50, 113, which is a nice and round number. So either a pullbacks into that zone and a rally higher, or continuous move higher on perceived US dollar weakness could potentially target 1 spot 14, nice and round number. Above that level, 1 spot 14.40. Breakout above that level targets 115.35. Alternatively, either a pullback and the loss of that zone could potentially open the way for a deeper retracement and then a retest of this falling resistance trend line towards 111.60. Only the confirmed loss of that level and end of day close could change the outlook, potentially targeting 111 to the downside, possibly even 110.80, 1 spot 10 to the downside. Cable also appears to be forming a bit of a breakout. We had a falling resistance trend line in 4-hourly time frame. The price is currently breaking out above that level, retesting it, which is at 126.40 as a confirmed breakout level and potentially moving higher. We are capped currently by this orange line, which is indicating the sequence of these previous highs and also 200 period moving average in 4-hourly time frame. There was a big divergence from the price point of view and also the indicator point of view, and from the longer term monthly and weekly time frames, 125.30, 125.50, 125 were the main support areas that most of the traders were keeping an eye on. So big number, very big number. So key trading level going forward is at 126.40. Bulls are in control above that level, at least from the intraday point of view, potentially targeting additional upside resistances towards 128.20, 129, nice and round number, and also the cluster of these previous lows here around 29th of April. Breakouts above that level could potentially target even 1 spot 30 on the upside. Alternatively, a dip lower and confirm loss of this zone here, 126.44, end of day close below that level, would change the outlook, targeting 126, 125.30, possibly even 125 to the downside. Dollar Japanese yen under pressure. The price action is downtrending in daily and also 4-hourly time frame, capped by this falling resistance trend line and also this orange line here, which is our 200 period moving average in 4-hourly. So the current price is below 20, 50 and 200. Despite all the efforts from Bank of Japan, Japanese yen weakness did not materialize, and instead we saw Japanese yen strength. So this is dollar Japanese yen continuous push lower. So the key level for us to watch going forward is at 107.20, the first major point of support to the downside, the cluster of the previous lows. Any oversold bounce backs into the resistances towards 107.80, 108, 108.20, 108.50. So rally from here into this zone would quite likely incentivize bears to come in and engage again, potentially looking for more downside towards 107, 106.60, 106.30. Alternatively, if we see a rally into that zone and the breakout, the end of day close above 108.50, that would cause quite a lot of short stops to be triggered. So they're basically a short squeeze, potentially targeting additional upside resistances. In that case, it would change the outlook to targeting 109.15, 109.80, possibly even 110 to the upside. Let's talk about gold. Gold is trading very close to 5 or 6 year high towards 1400, 1415. Bulls appear to be in complete control at the moment. Weaker dollar is bullish for gold. We have the price action, which is currently supported by rising multiple moving averages and also rising support trendline. Key level to watch, or key zone to watch as a support, would be pullbacks from the current highs or current levels towards 1377, possibly 1360, would likely incentivize bullish traders to come in and engage, looking for a rally higher. As long as we have this US dollar weakness, potentially targeting 1415, 1435, possibly even 1456. Breakout above 1456 targets 1480. Alternatively, if we see a pullback and the end of day close, the loss of this 1360, 1357, and the retest of that trend line from underneath, so the first level of support at 1338, would then change the outlook, potentially looking for more downside side or kind of corrective pullback lower, targeting 1320 and even 1300 to the downside. Lastly, let's talk about crude. Crude had a really nice and bullish rebound from 51 lows on the increase of geopolitical uncertainty, possibly an increase of military intervention involving US, Saudi and also Iran. The key level for us to watch going forward is at 54.70, 55. So the pullbacks into that level from above would likely incentivize bulls to engage, potentially looking for more upside towards 60, 60, 30, where the price would meet this falling resistance trend line. So some heavy consolidation is quite possible around that level. So either pullback and rally, or rally from the current levels into that zone. Keep an eye on that 60, 60, 30. That's a huge level of resistance based on the previous swing low and also falling resistance trend line. And also it's a fib in a different time frames as well. So either a rally breakout above that level would appear to be even further bullish, potentially targeting 63, 64, possibly even 66. Alternatively, if we see a rally and rejection or a pullback from the current levels, the major point of support is at this level here, 54.70, which is the cluster of these previous highs of what appears to be a double bottom here. Confirmed loss of that level, the end of day close below that level, would then negate this bullishness, which could be triggered by either supply and demand, inventories, or maybe some kind of peaceful resolution of geopolitical uncertainty, potentially targeting 53, 52, 80, possibly even 51 to the downside. Thank you for watching. Thank you for listening. Stay safe and happy trading. Bye for now.